G'day guys, Red Goosens here, and welcome to a monthly update. It's been a little bit of time since I've sent out a monthly update. I've been very busy over the last year or so, closing on deals with Wildhorn, building out an incredible team at the Wildhorn company, and really just growing our portfolio. I hope you're all doing really well today. I know that this message is coming to you in a bit of a crazy time right now. We're sitting here at the 27th of March, 2020, and we are in the midst of the coronavirus. And so I wanted to really provide a bit of an update on what we're doing here at Wildhorn Capital, what I've been up to in the last little while, and really let's start looking forward into what's going to happen in the future coming down the road and talking about a recession. So I want to start to talk about the good, the bad, and the ugly. And so we can start with the good. And so in the last little while, since I've given the last monthly update, some huge things have happened on both on a personal level, but also at a professional level with the investing career. So we are now at 1,900 units, which is really incredible. And we've been doing that since 2016. We have 8 deals, 8 syndications that we've completed. And we just recently closed on deal number 8 in Austin, Texas. It's in probably the closest deal to downtown Austin. It was called the Hawthorne at the District, and we're really pleased with that deal. It closed on March 12th, and we're really lucky that we got in just before the big craziness of coronavirus hit the world. So that's really been part of the good. Some other good is that, the Investing in the US podcast has been going in leaps and bounds. The book, Investing in the US, The Ultimate Guide to US Real Estate, did get to #1 on Amazon across 3 different categories in real estate sales, and commercial real estate. So if you don't have get your hands on a copy, you can look at the links in the bio below, click on it and do grab yourself a copy. Also, we do have coming out is the audiobook for Investing in the US, and that is currently being reviewed by audible.com. And when that does go live, I'll send out another email telling everyone that it has gone live. And you should definitely, if you don't like reading and you want to listen to it, then you can go to audible.com. So that's really been the good. From a personal level, my wife and I have been going really well. We've been traveling a lot, but also just trying to keep fit and healthy and stay out of the craziness and try and stay home as much as we can. And we were supposed to go to Mexico City this weekend for my birthday because I turned 34 years of age earlier in the week, but that's all been postponed, and we've got another trip coming up here in May, but we don't know if that's even going to go ahead as well. So a little bit of uncertain times, but overall, from a personal point of view and a professional point of view, closing on deals, podcast is going really well. Personally, relationships are going incredibly well, and looking forward to doing a little bit more traveling, a little bit more surfing. In terms of the bad and the ugly, I'm sure we can just combine the two of those and really get into the nuts and bolts of what everyone's worried about now. And they're talking about the coronavirus. So as I said earlier, we're sitting here in March 27th, 2020, and the coronavirus has hit pretty much every single country around the world, particularly in the Western hemisphere. A lot of countries are in lockdown. I know we're sitting here in Los Angeles, California, and we are supposed to be in a bit of a, not lockdown, but, stay at home and social distancing and all that sort of stuff. And it's been a really weird time. And I don't know how it's all been received, and hope everyone listening to this and reviewing this newsletter is safe and healthy first and foremost. But we've all got to make sure that we are safe and healthy, and that this unknown virus is we nip it in the butt really quickly, so it doesn't potentially kill a lot of people. But in saying that, it's also weird times in that we've shut down entire economies across the world for this one virus. And it's definitely interesting to why this particular virus. And if you read into some of the media outlets out there, it's because of the unknown of how much it can spread and how much it can kill. And it's been really some complete swoops and from local governments to shut down economies really quickly and shut down businesses. And I have a little bit of not an issue with it, but I have a little bit of like a scratching of the head, I'd love to see the statistics after we've all got through this and everyone's safe and happy and well. Like, how many people have died from, cancer or heart disease or HIV in the last 3, 4, 5 months? And we definitely don't go and slow the economies down, the world economies down for those types of things and deaths and stuff like that. But for this particular virus, we do. And I don't mean to ruffle any feathers here. It's just it's an interesting data point that I want to, say and just sort of get people thinking about. Because at the end of the day, governments have imposed these restrictions on businesses, on people that can't work. And that's really going to affect the GDP. And so if people sitting out there thinking that we're not going to be in a recession, this is the start of the recession. So I'm really, really feeling for those types of people out there who are paycheck to paycheck, who have been, fired from their job, have been let go. Businesses, small businesses, cafes, restaurants can't keep the doors open because of the coronavirus, can't keep the bills paid. So it's going to have a huge effect on our economy. It's going to have a huge effect on us as a psyche. The only positive, I think, my opinion, that is that this is what was not a systemic issue to the financing world. It wasn't, say, real estate backed failure like it was in 2008. So I think the recovery, whenever that happens, will be kind of swift. So it will probably look like a V shape rather than a U shape. But in saying that, I really want to talk about what we're doing on in our portfolio to help those people who are paycheck to paycheck. Because let's be honest here, we, Andrew and myself, Andrew Campbell, my business partner, and myself, we own low to medium income households in Texas. So a lot of our tenants are going to be hit by this wave of unemployment, or and you look at the latest statistics, 3.2 million jobless claims were made, but it's a huge spike, and that's going to affect us as real estate owners. So what are we doing, I guess, is the question you're probably asking yourself, of what are we doing to making sure we're quelling or making sure we don't bleed money, and we're making sure we're helping as many people and remaining safe and still paying investors and still keeping the investments going. So let's start at a 30,000 foot level. This is, as I said before, this slowdown, this government-forced self-isolation will be causing a recession. We will have slow GDP growth. And for those people who don't understand GDP growth is essentially just people spending money, people out there spending money, trying, on coffees, on restaurants, on going to bars and hanging out with friends, and stimulating other small businesses for products. We buy goods and services. When you can't do that, and you've got to stay inside, and we've got a social distance, and you can't do that for an extended period of time. And when I say extended period of time, it may be 3, 4, 5, 6 weeks that we have to stay socially isolated. That's going to have a major effect on the economy and the GDP. Now, the government has mentioned about a stimulus package, which is awesome, but how quickly is it going to get into the hands of the people who actually really, really need it? And that's going to really come down to how quickly we're going to be able to rebound. I think in general, those people who can get back into spending money, can get back onto going on holidays, can get back into injecting money into the economy, will do so very quickly. But it's the other people who are on the lower end of the spectrum who are going to probably struggle a little bit more. And that is the unknown in terms of how long the recovery will take. Those people in lower income households who may more than likely have been more affected than other people who can maybe do their job online or from home or using Zoom, and sort of business as usual for those types of folks. But you've got the other types of folks like in the service industry, contractors, GCs, laborers, admin staff, people who work at stadiums and events. All those types of folks are going to be the ones that are really, really affected by it. Now, the stimulus from the government, and not politically aside, we don't want to get involved in the politics, but it's an amount of money, which is great, but it also we have to make sure that we're getting out of this social isolation at the same time. So the money is great, the injection is great, but also got to nip the disease in the butt so we can all get back to business as usual. We all can get back to work, and I think that's really, really important. So what we're doing on our properties, which is trying to make sure we're getting in front of it and making sure that this will affect everyone, real estate investors as well, and those people out there who are saying, oh, look, you should be involved in real estate because the stock market's crashed. It's like, well, when people don't get paid to do a job because they have to be forced to stay at home, well, then what's the first thing they might skip when they don't have any money? That's rent. And so us as multifamily owners, we're making sure we're really getting our hands wrapped around the issues, right down to boots on the ground. And some of the things we're doing, just to give you a bit of advice on what we're doing and a bit of insight into how we do our operations, is first and foremost, we want to make sure that all our sites are safe and healthy. And so that means we've shut down all the leasing centers. We've shut down all amenities, so gyms, pools, and people have to stay in their units. So we want to make sure that those, everyone is happy and healthy first. And if anyone does contract the coronavirus, which knock on wood, is nothing. None of our residents have it over 1,900 units. But that is really important to make sure that the tenants are safe first and foremost. It's really, really important. The second thing we're doing is making sure the staff's is remaining happy and healthy. And that is making sure that our maintenance techs, that we're reducing our interaction. We're completely stopping all service requests right now. So it limits the interaction between the tenants and the maintenance techs, making sure that our leasing staff are doing virtual leasing tours. They're not doing actual mano a mano or in-person leasing tours. And that's actually bringing up a little bit of an opportunity in this sort of slowdown, in this forced isolation that we all now live in this new world. And that is that, little technologies like Facebook Live, like Instagram Live, we've actually captured a couple of virtual leases through doing these virtual tours, self-guided tours, where the prospective tenant may call the property manager, and they may be doing a FaceTime with the tenant or the prospective tenant, and they can be showing them, and the tenant lets themselves into the actual unit, and they go through a walk around the unit with the property manager on the phone. So there's been some really cool ways in which we're starting to come out as an industry, as a real estate industry, particularly in the property management game. We're starting to be a bit more technologically focused, which, there's always a silver lining to every bad issue, right? And I think moving forward, hopefully it gives a bit of a different perspective in terms of how we can lease units through virtually, online, through video, which may in turn may reduce our payroll as operators. So it's very interesting, that side of the coin when you come to this forced isolation. But there is something that we're making sure that all our leasing teams are doing, which is that sort of more of the virtual tours, so they're not having any of that interaction. I briefly mentioned before doing self-guided tours, so having automatic keyless door hardware entry systems on the units that are available. So people can come in, they can register, they can send a copy of their driver's license to the community manager, and then they can then go and they get the code, and they can be able to punch the code in and walk into the unit and check it out for themselves without having our staff interacting with them with potentially where that virus could be transmitted in a worst case scenario. So they're the sort of things we're doing to keep the tenants safe, to keep the employees safe, and making sure our communities in general are not contracting, limiting interactions with one another in order so that no one contracts the disease. In terms of how we're helping the tenants from a renting point of view, we're doing a number of different things in regards to making sure that we can pay, that people can pay on time. And if they can't, what steps do we have in place in order to help them make some sort of payment? So at the very basic level, all renewals that are coming up, typically on all our assets, we have about a 50% renewal rate, which means that every single month there will be a handful of tenants that their lease expires. And typically 50% of those tenants that have the lease expirations coming up will leave the property and go somewhere else. What we're offering is that we will do a $0 increase on all renewals if they renew their lease and stay at the property. And we will try and, instead of having 50% renewal rate, we're trying to get that up to a 70 or 80% renewal rate. That's one thing we're doing. The other thing we're doing is making sure that we're surveying all the tenants to see who's actually going to have an issue here. What's the percentage of our renter base that will be affected by this slowdown? And really feeding that back into us as owners so we can make educated decisions and make sure we're making the right decision towards steering the ship in the right direction. Some other things we're doing is making sure we're having payment plans. So say if someone is going to struggle to pay rent come first of the month in April here, maybe they can pay a portion of it by the 10th and then pay the rest of it by the 24th, or have a payment plan that happens over a period of 2 or 3 months that they can pay off or pay back the rent that is owed. We're also getting rid of all amenity charges, meaning sort of like trash valet, any amenities for mail package centers, anything like that around pest control, really making sure that we're reducing the burden on the tenant, or the cost burden on the tenant as little as possible. We're taking off if people have to pay by credit card, we're waiving all credit card fees. And we're also allowing third-party people to help contribute to tenants' rent. So you might have some family members of our residents who might be able to chip in and help pay for cover the rent. So we have some third-party income verification and income payment systems that can help pay for a particular tenant's rent. So all those things we're trying to do to make sure that we're easing the blow that we think is going to come the first of the month in April. The other thing we're doing is talking to lenders. What's going to happen if we do see, say, 20 or 30% of our tenants just can't pay the rent? What does that mean from a debt service coverage ratio? What mechanisms do we have in place in order to maybe delay the interest rate or push it off a period of time? I'm sure a lot of people have been hearing about the Freddie and Fannie forbearance clauses. And definitely we're hearing on the operator's side that Freddie and Fannie are open for business. But on the Fannie side, I had a call today with one of my lenders, Patrick Short from Newmark Knight Frank. He's been very influential in our growth here at Wildhorn Capital. And he had some very interesting topics to talk about when it comes to Fannie Mae on the commercial lending side. They say that they're open for business, but what they're really doing is also doing some other crazy stuff, which I've never seen before in my time in investing. So any new debt that they're trying to bid on for new projects, they're going to force buyers to have 12 months worth of interest reserves, 12 months worth of tax reserves, 12 months worth of insurance reserves, and 12 months worth of repair reserves before they would actually close on the deal. So what they're essentially doing is bidding themselves out of competition. So they're saying they're open for business, but really what they're doing is putting so many caveats on it that they're not going to be competitive when it comes to providing a loan. Now, Freddie has not followed suit as yet, and I know Patrick was actually going to be on a call this afternoon. This is Friday the 27th, talking to Freddie about those exact things, if they're going to follow suit with Fannie. But I did hear that in the month of March, there's $1.3 billion of applications for Freddie and Fannie Mae loans that are completely on hold right now, which is scary. So what does that mean moving forward? So that's the agency side. The agency side saying they're really open for business, but they're not really open for business, and it's going to be a weird time. On the bridge side, I've talked to a couple of lenders who are, half of them are sort of 50-50. Some are saying they're completely out of the game. They're not lending on anything anymore. They're going to wait and see. Other people are saying we're still in the game. We're still hunting for deals. And so really the message I'm trying to get to those people out there listening to this is you've got to make sure you're talking to the right people, because yes, we're going to have a slowdown right now. And yes, we're going to have some issues with potentially getting lending. I know on a personal level, I'm actually trying to buy a house right now here in Los Angeles, and my lender, who was supposed to close on it last Wednesday, they completely walked away from the table 24 hours before we're supposed to close. So I'm scrambling to get other personal financing to close on very simple single-family housing. So there's a lot of turbulence in the water, to say the least. But what I'm here to sort of change the mindset of is that we are now coming into a recession. We've been wanting this recession for the last 12 years. It's going to be a slowdown. And I think for those people out there looking for deals and looking to try and make deals happen, and if you can work with the right people and the right lenders to get deals across the line, you'll be very successful. We've seen a lot of deals that we're currently underwriting today that had the whisper price of, say, 40 million bucks, and now the broker's saying they'll take 35 miraculously overnight. So I think we're going to see some softening in cap rates. We're going to see some softening in buying prices. You're going to see not as much competition. And so for those people who are out there still trying to hunt for deals like we are, we're still being very opportunistic. Changing that mindset to know this is going to be a time to buy really good deals at maybe a bit of a discount. When the economy does recover, say in 6 to 12 months' time, you'll be sitting really, really well if you can get a deal over the line today. And so we're definitely continuing to look for stuff here at Wildhorn Capital, where we're crazily underwriting deals to make sure that we're getting some cracking deals closed here in the next couple of months. But we've got to then add the lending piece to it, which is probably the hardest, most ambiguous thing right now. And we're also just sort of waiting and seeing what's going to happen with rents in terms of the come first of the month. A lot of, we've been talking closely with our property managers, and they're thinking that April may not be so bad. It actually might be May. You know, people have got some savings from March, and when the sort of shutdown came, it sort of was mid-March, so they might have be able to have some savings to pull down upon, coupled with sort of this stimulant package to maybe pay for the month of April. But what happens in May, or what happens in June if this thing continues to go on? So a lot of things going on right now, a lot of crazy times. I think we all need to remain with level heads. We all also need to be consuming as much decent information as possible, listening to different folks out there about and I'm not talking about the major media outlets, about the fear porn. I'm talking about talking to people who are thought leaders in the space of real estate, world economics, even US economics, and how that relates to you as an individual and how you're going to choose to invest in the next 6 to 12 months. And really keeping your eyes focused and open on different opportunities that do come down the line. I know we'll have some opportunities coming down the line here in the next couple of months. Keep your eyes out for that. And guys, if you have any questions about what's going on, please reach out to both myself or Andrew. It's Reed at wildhorncap.com or Andrew at wildhorncap.com. And I just want to say thank you for tuning in and listening, because we are in some pretty crazy times right now. But it doesn't mean that we can't navigate this and navigate through this to make sure that we come out the other side with a big bright future ahead of us. Remember to subscribe to the YouTube channel if you want to, give me your thoughts and leave some comments in some thoughts in the comments below. Also subscribe to my podcast, and we've had some cracking episodes over the last 12 months, and I'm going to leave 4 of my top episodes that I think have been the best in 2020 in the links below. So make sure you check those out. And we're going to try and do this every single month, a little sort of check-in, a little sort of monthly update. And we're going to do it all again next month, hopefully, if we don't get too busy here. So be bold, be brave, and remember, go give life a crack.